You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
It's time to rock out once again with everyone's favorite bi-weekly option show. Yep, it's time for the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If I sound a little bit different, it's because I'm coming to you not from our scenic studio in Chicago, even though I'm beaming through there to come to you live. I'm actually coming to you live from, I guess you can call them the hinterlands of Florida, out here at the CBOE Risk Management Conference, talking about the cutting edge of all things volatility and portfolio management and hedging and all that sorts of fun stuff. We'll get into that in a little bit. Of course, you guys know how to get the show by now. You can always join us live, like you are right now, hopefully every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, MIXLR. Grab that link once, set it, and forget it. Some people have mentioned they have a harder time with the web streaming on the Mixlr than with the app. So if you are one of those people, try the mobile app. People report a lot better experience sometimes with that. I'm not sure what it is with the caching on the web streaming. It seems sometimes to buffer for a while. So if you're one of those people having problems, grab the Mixlr mobile app. It's free. You can do the same thing on it, and it might make your life a lot easier. Of course, wherever you are live after the fact, however you listen, make sure you hit us up. Questions, comments, insights, pearls of wisdom. If you're listening live, make sure you head on over to our Twitter page right now. You can vote in our poll for what the heck you want Uncle Mike to talk about in a little bit later today. Speaking of Uncle Mike, let me spin the wheel from here in Florida. It works a little bit differently, but it still works. And let's see who we're joined by. Oh, surprise, surprise. We are joined by Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the old show, sir.
Happy to be here, and I'm glad you brought the Florida wheel down with you, so that way it works in the southern states.
Yeah, because otherwise, it wouldn't be any fun at all. And I'm trying to look. Are you ready, Uncle Mike, for what I put out to the world? I don't know what you had planned for the strategy block. But what I put out to the world, if I could find it, let's see, because we are busy tweeting away. Here we go. I asked the world if they wanted you to talk about SLV collar adjustments, bit of a joke there, why you love stupid so much, rolling SPY puts, or other. And so far, rolling SPY puts is winning with 43%. So we'll see. We still have some more voting to go. So I don't know, does that jive with what you were planning on talking about, Uncle Mike?
I will do what the audience wants. I am here to serve, not be served.
All right. Well, then you do that, and then maybe we'll see. These numbers might change. We got a little bit more time for vote. If you're listening, get in there, vote. Fortunately, on the podcast, you missed the vote. You got to vote live. This is the short-term flash poll on this one, and get your votes in. And maybe you have a suggestion which one Uncle Mike to talk about. You really want me to adjust that collar? I know. I'm with you. Maybe we'll get there one of these days.
Oh, and also stupids, you know that.
I kind of did. That's why I put that in there. All right. And also joining us from farther afield to the hint. Someone asked me today. I love this conference, by the way, because it's full of our audience. Our listeners they abound at events like these, and people are coming up to me all the time asking me about specific episodes, telling me they like the show. So I appreciate all of you. He came up to me at RMC this week. One person, and we're joined right now by the Rock Lobster, Andrew Giovinazzi from Option Pit by way of the hinterlands of Maine. Someone came up to me today, or yesterday, I think it was, Rock Lobster, and asked me, who's that guy you beam in from the hinterlands, and where are the hinterlands? Just out of nowhere, didn't introduce himself, nothing. He just had that burning on his brain. He had to know. So you were the topic of conversation yesterday at RMC, Mr. Rock Lobster. That should bring a smile to your face.
You know what? I who knew that I would be famous moving to Maine? I guess you just have to move to the middle of nowhere and you become famous. But I want to know, when am I going to get my own flash poll? Tosaw gets his flash poll. Why don't I get my flash poll, for crying out loud?
What do you want your poll to be about? You need a segment. You need a segment. I'm trying to make your workload less. If you want more work, I'll be happily give you a segment and make you dance to the whims of the audience as well. It's up to you.
I had a little Tosaw jealousy for a second, but I'm over it now. I'm ready. I'm ready for the option block. I'm ready.
Don't we all have a little bit of Tosaw jealousy every now and then? He's just such a happy guy.
St. Charles, it's that leafy lifestyle. Oh, wait a minute. That's what I did too. Okay.
All right, then. With the team assembled from all over the place this time, we're going to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the name says, this is the portion of the show where we break down what was rocking and rolling in today's market activity. I've been a little bit otherwise occupied today with a lot of conference in, so I haven't had a lot of time to stay glued to the screens, but it was a bit of a mixed day. It seemed like markets were a little bit undecided in the morning. Towards the middle of the day, they were again kind of unched and rallying. Again, towards the close, most of the major indices closing up, maybe right close to or a little bit shy of a half a percentage point. S&P right around that level, kind of leading the faint charge that was out there today. NASDAQ right behind it, and the Dow bringing up the rear. Of course, all that green means our old friend, yield VIX cash, not exactly bursting at the seams out there today. Still in the 17, actually might be a little bit shy of that right now. Right around 1701, probably a little bit off that. Actually, I think there might be a delayed quote I'm getting here. So yeah, right towards the end of the day, right around 17, actually 1694, it just flashed through. As it updated, of course, I'm on some Wi-Fi here, listeners. I may have some syncing issues. We'll see, but still interesting stuff. Back in the high teens range. All of you who were picking for the crystal ball. By the way, another listener came up to me today and said he loves the crystal ball segment of Vol Views because it's just so hard, and we have such fun with it, even though it's so hard. And I was like, yeah, I know it is kind of fun, even though it is deeply embarrassing as well. But still, a lot of fun stuff. So a lot of stuff going on there. But I'll leave it to you two guys who were more glued to your screens than myself today. Well, let's start in that beautiful land of Skippy Zeros and lemonade known as St. Charles, Illinois. Uncle Mike, in addition to having tasty gyros, what was on your radar today, sir?
A bunch of things, actually. We have, of course, the steel tariff news that seems to be dominating the airwaves today. We're learning that Canada and Mexico are not going to be part of the steel tariffs, and it sounds like there's 15 days for other companies to try and negotiate if they don't want to be part of the steel tariffs. So it seems like what the president was announcing today was very much along the lines of more of a threat as opposed to an implementation, in that he's giving the other countries a chance to do some type of negotiation to lower the steel tariffs. Now, whether that's going to be good or bad for our markets remains to be seen. I actually don't think it's going to be, like I said, I believe a week ago today, I don't believe that even if we follow through with the tariffs and they do happen, I don't think it's going to be an overall bad thing for the American economy overall. Can it raise prices a little bit? Yeah, but I don't think it's going to be as big of a thing as what the news media is making it out to be on it. So with that being said, that was the big news of the day. The other things that we have going on today, well, of course, we got to mention Apple. It's up 1% on the day. Apple is approaching, going back after that 180 mark again to see if it can go after another new all-time high. So that would be something exciting for the Apple bulls out there. I like to say that I'm part of them, but I was an Apple bull pioneer, I guess. I was an old Apple bull who's kind of a retired Apple bull, I guess, but still there in spirit, I should say. A couple other things that are happening today in terms of the sectors. Leading sector on the day, of course, is consumer staples. XLP up just under 1% on the day. Energy is the only one that is down on the day. XLE losing 2 pennies, but let's face it, that's flat. That's really not a huge thing. The other news of note, we have financials not moving up too much, but overall, I wouldn't say this is a very massive day in terms of market movement, but I would like to say that I could see tomorrow being more of a day of movement as the market will have time to actually digest we'll have some time to digest what's actually happening and how the tariffs are going to actually have an effect or could have an effect on the market movement. Now, another big story of the day for those technicians out there, we actually do have a close. I believe the close on the S&P actually was above the 50-day moving average. Let me take a look real quick on my trusty chart. You can see I'm such a technician, I have to actually load this up because I don't really have it on there that much. But yeah, we actually did close above the 50-day moving average. So that, for those of you technicians out there, that's the first time we've actually closed above it in, almost a week. So that is a level that could be of some significance for those of you that follow that. And then from what I can tell, the next level of resistance we don't have for another couple percentage points in the S&P. So a lot of things happening today that I think could set the table for a lot of excitement in the coming weeks. Excited about the shows next week as well.
There you go. A lot of excitement. You're an excitable man when it comes to tariffs, sir. You love yourself a good tariff.
Oh, it's a fun word to say. Say a tariff.
It is. It does sound like something from the Victorian era. I'm discussing my tariffs and my customs duties. It does have a nice little, shall we say, steampunk ring to it. Speaking of steam and also punks, maybe more the latter than the former, Mr. Rock Lobster, what caught your eye in today's activity, sir? You're allowed to take umbrage at that, by the way.
Besides the massive amount of snowfall that hit the coast of Maine.
Yeah, I forgot to ask you, how are you surviving this snowpocalypse part 27 for you guys this year?
I don't know. My kids like it. We got I'm going to say 20 inches of snow pretty easily.
Jesus. Wow.
Yeah. It's a good amount.
So the ice rink is back in action then?
The ice rink right now is buried under 20 inches of snow.
Yeah, that's true. If you get the Zamboni going, you got an ice rink.
Yeah, and I need some cold. So there's some possibilities for this weekend. There's been sadness, like I said, about the ice rink. But we're going to table that because it gets me upset to talk about it. However, VIX, I think we finally, for the first time, let's see if it holds. Because there could be tariff stuff or more stuff, but the market did finally take a little gas out of volatility, and more importantly, they're starting to ratchet down the future expectation of volatility with VIX. Their VIX is going down, dropping below futures, and we'll see. I mean, I think when we look back at the month of February or the what do you call it, the zombie apocalypse for volatility that we had, that literally killed two products, killed XIV, and dang near exterminated SVXY, although it exterminated everybody that owned it. And wonder now if VXX can get back to its old ways of, sort of falling apart here. So there is, I think for the first time in a while, I'm seeing theoretical decay again on the product. I'm pretty sure I got to look here at the end of the day because I wanted to see how, because with this market, you look 20 minutes and then 20 minutes later it can be different. So if all of a sudden everything that got everybody worried just didn't get people worried anymore, and I still, in the back of my mind, I'm still trying to think that if there wasn't that massive covering of futures for the XIV products and SVXY products, would things have been as ugly for as long? And I'm still, I'm still, the jury's out on that one. I'm not quite sure if that unsettled people enough, or there had to be such a reach for volatility because people just end up getting short Vega trying to satisfy the future covering. I'm not sure yet, but the market's definitely been moving around. It's been very touchy still, but I think we were 2650 last Thursday, right? So, or 2675. So there's no shortage of 100 handle weeks for the SPX over the last 5 weeks. And I think, barring, and strange things have happened, like that North Korea news kind of slid under the radar. Oh, North Korea is negotiating again with the South. That to me was kind of volatility positive, but it had nothing on Gary Cohn resigning over this tariff thing. And now it kind of turns out the tariff thing isn't really that big because Trump says he could change his mind or change the policy if anybody wants to negotiate. So definitely a new try. Let's just call this a new technique on negotiating better trade deals. And we'll see if it works. I don't know. As of right now, the market is dealing with it, I think. I don't know if you could say they like it yet. We did rally, but I think they're adjusting and dealing. What short-term high was like 2780 SPX. So if we start to fly over that, then they for sure have adjusted. But for right now, the expectation for vol looks like is going lower.
It's funny you mentioned the erosion finally kicking in again in VXX. I've been busy gallivanting around the country the last few days, but I was trying to work some nice aggressive bids in some downside puts in the VXX. I think I missed the last kind just because I was busy. I didn't have a chance to update them, so I think I may have missed my shot at the lowest of the low. I have a few from other levels. I'm not too worried, but I was hoping for that final bottom scoop for everything. Who knows? If this tariff talk is winding down, then perhaps that is the beginning of the long, slow death spiral that is VXX, which is what people come to play for with that, right? So that's what they're looking for. I mentioned I'm down here at the CBOE Risk Management Conference. I'll do a little quick rundown of it now. If you like a more detailed overview of the presentations of the topics, tune into Volatility Views tomorrow. I'll be doing that with Russell in a lot more detail. I'm kind of just going to fly over some stuff. By the way, Mr. Rock Lobster, you'll be amazed. Not as much talk about harvesting the risk premium this year. Does that blow your mind? Suddenly that all went out the window. How does that happen?
Well,
what a surprise.
I try to teach our clients to look at buying some VIX calls with your VIX calls and call spreads with, when you structure those vol product shorts, that way you don't get totally annihilated. And surprise, there's not as much talk about harvesting risk premium. I'm just waiting for them to bring back XIV because I feel like it's going to happen.
We have a listener question about that later, so don't spoil it if we get to that.
Okay.
Someone asking that exact question about XIV2.
I'm still trying to, and I'm waiting for the people to, sue the SVXY people for changing the leverage on the product. They're like,
I think that's pretty much a surety at this point. Coming down here, our outrage from our audience, talking to people at the conference, the outrage here, and the fact that it was handled so, I think ham-fistedly is a charitable way to describe it, I can't imagine.
Yeah, you could have end-of-life the product and then started a new one, right? But
yes.
But cutting the leverage down now when it's already at zero, I mean, what is it going to go? From 12 to 9?
The futures are already backward. The damage is done, and give people like 2 hours that you're going to essentially just transforming this thing into a half Franken product that nobody wants. That I can't imagine. I would be stunned if there isn't massive litigation over this at the end of the day. I never like litigation, but sometimes when people act poorly, that needs to be addressed. And I would not be. I've seen people sue for a lot less. Let me put it that way. In the marketplace than something like this. Interesting stuff out here today. I mentioned not much harvesting the risk premium. Interesting stuff too. Talking about some of the flow they're getting out of VIX futures here. They're saying about 60% of it still comes from what they consider the traditional like prop traders and trading firms. So not as much. They're trying to dial back the concerns about exposure of the VIX futures to things like XIV. They said according to their estimates, again this is from the CBOE, only about 5% of their futures volume was tied directly to the inverse vol trade. So perhaps not quite the death knell for the VIX futures that people were talking about. Remember in the days after the meltdown, CBOE stock got crushed because people thought that a huge chunk of the flow was coming from SVXY and XIV. Certainly some of it was, and they're estimating that now right around 5%. So interesting stuff for all of you out there who may be a little bit bearish on the stock as a result. Maybe that will change your opinion. Who knows? Maybe you want to dig and do your own research on that. Speaking of doing your own research and your own due diligence, it's time for us to do just that. Oh, by the way, I do want to mention this, kind of funny. I just got off a panel a little while ago about the plight of liquidity providers in the options and volatility world, which, as we all know, is challenging. And I mentioned it was ironic because right before I walked in, I got a call from someone asking me if I had heard about spot trading potentially closing down. And it looks like that is indeed the case. Their website is down. I think they post something on LinkedIn about shutting down and ceasing operations as well. So right before I walked into the plight of market makers panel, I heard that another market making firm was shutting down. So again, all of you out there who maintain that, market making is this fantastically lucrative cabal that destroys market, manipulates markets at their whim. If that were the case, many of these firms would not be going the way of the dodo. So yet another one, perhaps, and potentially shutting down in the wake of all this madness. We don't know if it's related to what happened in February. Maybe that was just the final straw that broke the camel's back. We don't know. Either way, interesting stuff out there. Speaking of interesting stuff, let's get to it. Right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Well done there. Let's get to the Odd Block, of course, a portion of the show where we break down the weird, the wild, the interesting paper that's going up while I'm down here in sunny Chicago, and Andrew's on 20 inches of snow, and Chicago is kind of frozen. We still got some time to dig up some UA for you guys. We'll kick things off, as we always do, in the realm of weirdo Tesla puts. I pulled these about an hour or so ago, so they might have changed in the last hour of the day. Again, I'm kind of running on some Wi-Fi and some cell signal, some other stuff here around the periphery of the conference, so I can't get updated numbers for you. But as of through most of the session, at least today, the 2019 puts out there in Tesla, the 50s, were actually fairly active, doing nearly 200 contracts today, and over 36,131 open, to be precise. As of towards the end of the day, none of the 2020 50 puts had traded. But interestingly enough, they have been so active that they just broke through recently this week the 8,000 level in open interest. We've been keeping an eye on those. They've been steadily approaching that level. So now, for all of you thinking maybe those 2020s are about a bridge too far, 8,000 contracts open on that strike, roughly a quarter of what's open on the 2019. So people clearly like that strike all the way out to 2020, which is just fascinating. Moving on, speaking of fascinating names, I know the Rock Lobster loves himself some Victoria's Secret, and we saw some action out there today. Victoria's Secret, of course, ticker symbol LB. I don't have my system there in front of me, so I can't tell you exactly what the stats are in terms of ADV and everything else like that, but I can tell you that there were some puts lining up, in particular perhaps a little bit of some line in the sand puts, as Mr. Rock Lobster likes to refer to them, out there on the 37.5 strike in April. Out there in LB Brands, a.k.a. the mother company of Victoria's Secret. Someone blasting out, looks like about 20,000 of those pretty much on the bid for 45 cents. OI is pretty small, so 280 contracts. So clearly opening, putting on a nice 45 cent blast away in this bad boy. They traded on the Philly there later today. Interesting of note, we're looking back at the year that's been out here in good old LB Brands. They started the year right around 50, right around that level, and kind of vacillated, got as high as looks like around 62 back in December of last year. Then they got their wings clipped a bit coming into late December, early January, it looks like, and they've kind of been vacillating around the 50. Got down actually, yeah, where they're low as right around, like I said, 42 or so. So someone perhaps deciding, actually got down the lowest 34, looks like back in mid to late summer last year. So perhaps someone deciding 37.5 strike, I should say, with the 45 cents or right around the 37 strike here is perhaps not a bad line in the sand to draw here on good old LB Brands. Mr. Rock Lobster, what say you about your love for all things Victoria's Secret? And then also, what do you think about these puts?
Well, what's there not to like about Victoria's Secret? I have to say, it's just it's art. That's all I can say. It's art. I really appreciate it.
Is everything Victoria's Secret in Maine? Is it all come in flannel? Is that how it works?
Exactly. Yeah. It's actually once you cross the border, there's a transformation for all the trucks of Victoria's Secret products. They become flannelized. There's a flannelizer actually at the Piscataqua Bridge. So, but here, this is a line in the sand put in there. It looks like they're wrong already. On a kind of an up day, Victoria's Secret didn't have, or Limited didn't have too good of a time. So this is just a big chunk of, I think, it's classic line in the sand put. This level doesn't look too bad, though. It's about almost a 2% return till April. So it's kind of a juicy put to sell, to be honest. So I think somebody looks like they want themselves some cheap Victoria's Secret. I guess there was a joke in there somewhere, and they want to buy it at year lows. I mean, the stock was $64. It's come off quite a ways. So it looks like a good spot. So it is a very interesting trade from that point of view, where somebody's trying to scoop the bottom of this thing.
Oh, did we discover a new line for the Carmen line to perhaps enter here? Are you going to be drawing some Carmen lines in the sand here in flannel Victoria's Secret?
Exactly. Maybe somebody discovered that they were changing their MO and they're going to all flannel. So
that'd be hugely bullish in your neck of the woods, certainly.
Yeah,
that'd be huge.
It would be big in our neck of the woods. But right now, it looks like somebody is picking a line. It doesn't look like that expensive of a company anymore, to be honest. So I don't know if there's a lot of growth left in Victoria's Secret, but it certainly looks like a good place. Somebody basically wants to make 2% on their money till April, and worst comes to worse, they're scooping the stock at $35. So actually, that looks kind of like, you know what? Maybe that's a Tosaw trade. Maybe he's out there in the Black Knight Fund, whacking the 37.5s out.
The Black Knight
Fund.
I like that.
Gosh.
Black Knight Fund. That's a little bit of dark side for Tosaw, but I kind of like it.
Yeah.
Uncle Mike, are you scooping a lot of flannel ladies' undergarments these days out there in some puts in Victoria's Secret?
Nah, my wife would kill me.
They don't come in flannel in St. Charles, I don't think. We'll see. Speaking of seeing stuff, let's see what else is cooking in the odd block here. We saw one of your favorite names, Mr. Rockloss. I know you used to like the gaming sector, not so much the gambling sector, but the video game. I know you like Activision and a bunch of others. EA kind of active today. EA, of course, Electronic Arts, big game publisher. I don't have exactly where they close. I'll let you do that diligence for yourself, listeners. But kind of interesting paper going up out here. Kind of looks like an ongoing chain of trades. Started doing a little bit of digging down here at the conference in the little time I had. It was kind of interesting, actually. We saw today, looks like kind of maybe a bit of at first glance, looked like a bit of a funky call fly going up in EA. We saw the June 125, 135, 150 call fly going up 11,000 by 22,000 by 11,000 times. Looks like those the 125s trading for 1135 right around the offer, actually on the offer. And then open interest is 14,000. And then we saw the 135s going up for about 625, also near the offer. And then the 150s going up for 185 on the bid. Then I started digging around. That open interest kind of intrigued me, so I started digging around a little bit. And I noticed that open interest is actually opened on the 125s back on the 9th of February. So when you go back to the 9th of February, you see actually a lot of paper going up out there back there. Looks like actually back then we saw paper coming in originally to do the 115 by 125 1x2 call spread. Paper coming in, picking up 5,500 of the 115 calls. Looks like selling 2 of the 125 calls. Doing it for, looks like a little bit of a credit they got there. And also, that wasn't enough of a credit. They also sold the 97.5 90 put spread 5,500 times. So they liked that, but perhaps, and then it looks like it worked in their favor. They blew through the 125 strike a little bit, but not, I don't think not enough to, certainly not enough to offset that 10 handle spread. And apparently they're deciding to roll those 125s now up to a little bit higher strike, 135, and doing it. Looks like perhaps 2x1, if that is indeed the case. So all sorts of funkiness. Also worth noting, size OI on those 115s. So that actually back on February 9th may have actually been another roll in and of itself. There were 70,000 contracts open on that strike back on February 9th, and they decreased by about 5,500 the next day. So looks like someone was rolling at least 5,500 of those up to the 125. So size call paper, size rolling seems like for the most part, if all this lines up the way it seems, fairly well-timed rolling for some of it at least, too. So interesting stuff. Let's look back at the year that's been out here in EA. They kicked off the year, looks like right around the 90 handle, and they spiked up to around 130 back about a month or change ago, and they're back up around those levels again right now. So interesting stuff. Mr. Rock Lobster, size OI and the calls out here in EA, size rolling, fairly well-timed rolling as well, financing 1x2s with put spreads, all sorts of doing stuff going on out here. What do you make of this call palooza here in EA today?
I think palooza is the right word. It's
definitely a palooza.
It's a palooza.
Perhaps even a Lollapalooza.
The intriguing thing is the bulge in the 135s, trying to figure out what the heck they were doing there. Are they it looks like they want to get longer and roll up. Is that the way you're taking? I'm just looking at it like this. It feels like they're trying to get rid of them, but all the pricing seemed funky again from the the pricing is where it kind of maybe falls apart a little bit. But when they got this kind of size, the execution could be anywhere. They put up these things all over the place. It feels like they want to reload.
That's what it seems like to me.
Yeah, but the curious thing is the reloading part. So if you look at the quarter 35.50 fly, that net price is $1. So it's $3 for that fly. That's a 10 handle fly. It's not the cheapest. No, actually 12. That's $1 credit. So it's 85 cents. So I know there is a ton of open interest there, but it could be, possibly. Somebody is adding a fly for a little over $1. I don't think that's totally out of the realm of possibility, because you have $12.50 for the 135 guts. That's $1.15 credit, so 70 cents. So it's possible somebody's trying to pick up a cheap fly at that strike. I'd have to check the OI, but for it all, it does still feel kind of bullishy at the top too. So
yeah, and the fact that
it has that smell about it.
It does, and the fact that there's so much OI on that 125 strike, and the fact that this guy probably has been rolling since at least back in the 9th of February, so he's probably sitting on some house money, which would kind of make sense if he was flipping it to 2x1 now instead of 1x2. He has some house money to burn, so he's going to load up a little bit. And I guess he's bullish. EA, if you've been following the listeners, kind of been beat up a little bit lately, of course. They make a lot of video games, and they were much maligned in the media last year for coming out with a Star Wars game that wasn't exactly friendly to the end users. Trying to make you buy a game and then buy a whole bunch of extra stuff afterwards, to the point where Disney apparently even cracked down on them and is threatening to remove the very lucrative Star Wars license from them, which is why a lot of analysts have been cutting their estimates as a result. So clearly, our friend here hasn't been doing too poorly in the rolling of calls play here. And clearly, if this is indeed the case, Mr. Rock Lobster, he's got a little bit more upside outlook on this name. Maybe he thinks it's been a little bit overdone out there in all things EA. Yeah, other way, interesting paper out here in EA. Definitely worth a look, listeners, if you want to see maybe how it's done, or maybe you have a different opinion of how these bad boys were going off. Speaking of bad boys, we'll wrap up with this. We talked about some lines in the sand earlier in the flannel ladies undergarments of Victoria's Secret. We'll wrap it up here in perhaps a less sexy segment, but I guess it depends what you do. Maybe this one floats your boat as well. This is Snap-on Tools. Perhaps someone coming in to draw a line in the sand pretty aggressively here in Snap-on Tools as well. In particular, we saw the Ape 140 puts going up for $1.34, 4,150. It's actually total about a little more than, it's like 4,700, or it's actually a little over 5,000 total on the day, including one block of 41.57 going up for $1.34. The rest kind of for similar prices throughout the day. Below the bid in that first print, which is kind of interesting. Also worth noting, OI, a nominal 18 contracts there. So clearly opening. Let's look here, see how this line of sand, I should say, lines up here. And looking at the 1-year chart here for good old Snap-on, they've been all over the place. They kicked off the year right around 170 last year, I should say, a year ago. Then they kind of flirted. They got as high, looks like a little bit north of 180 back a few months ago. They also got as low as right around the 140 handle, let alone probably where our friend decided to write that strike. Mr. Rock Lobster has taken home with a comparatively more straightforward one. Someone looking at a nice chart or two and saying, 140 for Snap-on. I think I'll do that, and I will do that 5,000 times for $1.34. What say you, sir?
I think this kind of rally today has brought the put-selling bulls back. It's been a while since we've had a line in the sand just straight up whack some puts out. I think at least for the last month or 6 weeks, we just haven't seen a lot of that in the odd block. So I'm thinking the giddy bulls are out there again. It's the same thing where 1% on risk that you have to put into it, which I don't think is bad on a monthly put right, and you get the stock 10% lower. So they are looking at all the shenanigans going on and saying, I'm not seeing a lot up there, but I will take my 1% for the month and giddy up and get along doing something else. So that's what that looks like to me.
That explains why there's no one here talking about harvesting the risk premium at the conference. They're all back in their offices blasting out puts in Victoria's Secret and Snap or Snap-on, I should say. So that's all are. They're not here talking about it. They're out there doing it. So interesting stuff nonetheless. Speaking of interesting, it is time for the strategy block, in which I will reveal the results of our poll here, and we'll see what Uncle Max is going to talk about. So bated breath, and we wait for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
Such producing coming out of the Chicago studio today. I could not have done better myself. All right, moving on to let's see what our listeners chose. And as this flash poll comes to an end here on the live show, it was a hot battle between SLV collar adjustments and why Uncle Mike loves stupids. But at the end of the day, rolling SPY puts takes the cake, Uncle Mike. I know this is a topic you're not particularly familiar with. You don't really do this all too often. So I know you're kind of going out a little bit outside of your comfort zone, Uncle Mike, so I apologize for that. But that said, our audience would like us, or like you, to regale them with some tales of when and how to roll their SPY puts, sir.
Oh, if there's nothing that's more exciting than rolling some SPY puts, that's exciting. All right, well, let's say that the market goes up, the market goes down, or the market stays the same. Let's go through all three scenarios. The first one, you're in a put, and let's say that you sell an out-of-the-money put. So SPY is at, it's at 274, and let's say that you're short maybe a 270 put. Don't want to get into spreads today because I want to keep things simple, but let's just say you short the 270 put. If it goes higher, and by it being the market or implied volatility going lower, at what point do you get out? Do you just let it expire worthless? Do you get out of it at a certain point? What do I do? Well, let me tell you what I do. Should the market go higher, I have my 80% rule. Now, is it perfect? No. Sometimes I might be plus or minus a penny, or maybe it'll go overnight, whatever the case may be. But I try to get out when I have collected, when I can get out for 80% of what the initial credit would have been. So let's say I would have sold the put for $1. If I can get out at 20 cents, that's when I like to get out for a profit. Short option premium, it's kind of like a washcloth in that you get the washcloth wet and and it's dripping. And when you want to squeeze out the water so it doesn't drip all over the place, you squeeze and squeeze and squeeze, but it's still a little bit wet. And it's not going to get dry unless you put it in the dryer or let it sit overnight. So the last 20% of premium is kind of like that water that's in the washcloth. It's very difficult to get out. So I think there's better ways to make the other 20%. So I typically like to get out when I've made about 80% of the profit. Sometimes it's between 80 and 90, but usually around 80 is where I like to do it. Now let's say that SPY were to stay the same. Same rules, folks. If If it doesn't move, the market doesn't move, I smile. It's a great day to be a premium seller when the market does not move. As soon as we get to the point to where enough theta has come out to where I can get roughly 80% of the profit, that's the time that I look to get out. That's when I like to do it. Now, the $1 million question, what if it actually goes against you? And the first two are easy. Any idiot can follow those two, take some profits. That's easy. That's fun. That's what makes you look like a genius. But the mark of a real trader is someone who can stay in the game after some trades going against him because he or she manages risk properly. Couple of ways with which to look at it. If I'm selling something that I want to get into, let's say that I want to be long SPY, I'll just let it get put to me and then perhaps sell some covered calls against it. That's a wheel trade. Or let's say that, well, you know what? I'm kind of concerned with this market. That's when rolling puts kind of comes into play, meaning that as the market goes lower, I like to buy to close the put and then sell another one at a lower strike price. Now, here's the fundamental benefit of that. Typically, tail risk has higher premium as markets go lower. So in other words, let's say that 270 is my line in the sand. So long as SPY doesn't touch 270, I'm just going to stay in that put. But the second it touches 270, a lot of times the volatility in the 266 or the 267 put, once again, I'm just making up numbers and shooting from the hip here, the volatility will go higher. So rolling from 270 down to 267, assuming you're not doing like a daily option or something like that, usually it won't hurt too badly. And you can buy a little bit of cushion for not a lot of money a lot of times. So that's one way with which to do it. Now, with that being said, I want to caution you in that if you do that too frequently, it can get pretty pricey. So at some point, you do have to kind of throw in the towel and say, I've had enough, or say, hey, I'm just going to own the stock and take this where I may. So that is the synopsis of the Uncle Mike shooting from the hip rolling puts.
And Mr. Rock Lobster, since you complained before about not having music and not having a segment, I will allow you to weigh in on this one if you want as well. I'm sure you have your own methodology. Let's just pretend I asked them for Uncle Mike and the Rock Lobster. So if you had to regale us with your own thoughts on when to roll SPY puts, what would you say, sir?
I do have a strike touch rule where if it gets to the short strike, I am rolling out and down, but I will only do it for a certain amount of time unless I own some out of the money junk puts against the position. So I don't do it with the index because index is kind of more, well, let's just call it indexy, but with equities, because, for an index to go down more than 10%, it can happen, but, equities are a little sketchier. It's equity can go down 20, 25%. So I'm a little tighter on those rules by how much I will take as a loss on an equity. So usually for me, no more than like 15%, and that is it for selling put spreads in an equity. So that just stops me because I figure, okay, you're wrong, and you want to sit down and reevaluate, and then I'll look at possibly getting back in again if that's what happens. So, but I give myself a limit on what I will lose. The only exception being if it's something that I want to own at a lower price, then I will, like what Mike did, Mike's idea of just taking delivery and then just wheeling yourself out of it or selling calls against it as time goes on, I think is a perfectly fine way to do it. But as for equities, I generally like having a couple of extra puts out of the money against put spreads that I sell. That way, if I keep rolling the put spreads down, I'm trying to collect that premium. One side is kind of gaining when the other side is losing, and I have a little bit more control over the position, and I can decide just to dump it for a scratch if it just becomes a total piece of do. So, which can happen. So that would be the only wiggle I would put in the Tosaw strategy. There you
go. Piece of do. I like that. Also, some words to live by. Indexes are more indexy. I like that. That might be our title of our show. That's words to live by from the Rock Lobster. Speaking of some words to live by, let's see if we can live by some of yours because it is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, I do want to remind you here at the start of the Mail Block that we're coming up on the launch of our annual now and much ballyhooed, much beloved, or perhaps if you're in the brokerage game, much feared Options Insider Broker Madness Tournament for coming up starting next Monday, the 12th. We will be pitting 16 of your favorite or perhaps your least favorite brokerage firms together in head-to-head combat. 16 firms will enter. Only one can survive. In the end, there can be only one. We all know that. So get your nominations in now. If you have a broker you like, and people have been hitting us up with your ideas, maybe you have a broker you hate and you want to vote against them. It works either way. We're okay with it. So get your nominations in now. Don't get mad at us if your favorite firm isn't on there because we didn't put it on there because you guys didn't nominate it. It's on you. It's not on us. So get the nominations flying hot and heavy. Should be a fun one. It always is fun. Maybe we'll add some interesting wrinkles to it. I know my team will get mad at me if I start saying that, but maybe we will. Maybe we'll add some, maybe some fun, maybe your favorite brokerage feature. We'll have some of those fight against each other, all sorts of fun stuff. And as usual, there will be incredible prizes to be won. So it's like the Chicago style. Vote early, vote often, vote as many times as you can. The more times you vote, the better chance you have to win some of our fabulous prizes. So stay tuned for that. Head on over to the easiest place. You can shoot them an email as well, but kind of aggregating everything around the Twitter ad option. So head on over there, get your nominations in now, and then prepare to battle next Monday. All right, some people chiming in. Philly Queso, about what we were talking about earlier with EA and that funky, crazy call roll and everything else. He chimed in saying EA guides every May earnings. Compare the May earnings moves to the other earnings months. It's about 8% higher on average. He says, in parentheses, 12% versus 4%. And he says, you're welcome. Well, there you go. Thank you, Philly Queso, for breaking that down. I'll have to look at that and see. Maybe I'll have to ask our friends over there at ORATS, who actually Matt is down here at the conference this week. And I'll have them break down EA earnings history for us and see if that actually rings true. Not that I don't trust you, Philly Queso. I'm just saying I like to trust but verify. Either way, interesting stuff. Maybe our friend here, Mr. Rock Lobster, has been taking advantage of that, and perhaps he's taking advantage of a planned aggressive move coming into the May earnings for EA. Certainly, if he's trading that much size, he might be aware of that interesting thing out there. Here's the question for you, Mr. Rock Lobster. It says the Rock Lobster suggested other ways to play VXX erosion other than buying puts. That might have been on a show last week because I'm trying to remember what he was talking about. Because he finishes up here and says, what was he talking about? So, Mr. Rock Lobster, what were you talking about?
The Rock Lobster suggested other ways to play VXX erosion other than buying puts. What is he talking about? You could trade VIX puts. You could trade VIX puts that are wildly in the money versus where the future are trading. So when the futures are in contango and you have that erosion, you could use VIX puts. So the old days, there was an XIV SVXY trade. I don't think there is much of an erosion play on that anymore. But VIX does make a great erosion play when you have that heavy contango. So that would be, at least right now, that's another way to do it. You could use UVXY as well. Although UVXY is not as exciting as it used to be, it's still, on a short-term basis, can provide a lot of erosion. So those would be the ways that I would think about it. I think most people can't really short the stock, so I don't think it's because you have the potential to buy in. And the last thing would just be selling out of the money call spreads in VXX. But usually those can be a little problematic sometimes when things blow up. So those are the other ways that I would look at erosion plays, because you get the same future melt with VIX, and sometimes on a percentage basis it can be pretty steep. It's just right now it's not there because of backwardation. So I mean, if you want to be short vol, I'm just thinking now that is about the only way. VXZ trades too sporadically, and the longer term options don't move enough, and they're not very liquid. So that would be the other way. It's VIX puts are my favorite kind of zone 1 type of trade, but I think that is a harder trade right now. You might think even maybe a put fly or a put spread in VIX puts as well right now. If you start looking at April, there's some potential there. It's slowly brewing, but it's not as tasty as it usually is. But VIX puts still work.
Good old-fashioned VIX put. By the way, futures melt. That sounds tasty. Is that as tasty as like a ham and cheese melt? It sounds pretty good.
Like a lobster melt?
Ooh, lobster melt. There you go. All sorts of tasty melts out there, including
the reality
futures
was SVXY call spreads was a great way, and I think now with the product, I still haven't spent enough time pricing the SVXY, mostly because now they've already done like all this bad stuff, and it's sort of like kryptonite, and nobody wants to touch it, which probably means it's the right time. But call spreads in there. I'm looking at the decay profile to see if there's anything reasonable enough to worth buying, especially where we are, because if we do get let's say a month of real future erosion, I still haven't priced SVXY to go where it can go and where a call spread would actually be worth it or not. But the call spreads in SVXY, they used to be great
yes
ways to trade.
I'm with you there. They used to be good until about a week ago, and then and then the lawyers got involved, and now it's all crazy. I mentioned the XIV2 really quick. I'll probably discuss that more on the Bob views tomorrow. Really quickly, Mr. Rock Lobster, do you have a thought on that? So Bixby asking, do you think there'll be an XIV2? Remember you mentioned at the top of the show, I said wait for the end. So let's get it in now. Do you think there's going to be an XIV2 anytime soon?
I think it will be back in a year.
Frank, yeah, I'd be impressed by their gall if they came out with a new one right now. Just given the heat that's on that space, you probably want to wait a little bit.
Right. Oh,
go ahead.
Oh, no, it's okay. And here's a guy, somebody just LNC about just SVXY calls suck now. What about selling puts? I think if you're, it's like anything. You want to sell puts when the product is at 0, not when it's at 150. So I think, you could sell puts, or you could sell put spreads in here. And, really, what are you going to get on a put? On a 21-day carry put for SVXY, you are going to get, you're going to get 3% on a 3-week hold. So, it's compared to the glory days. Do you want to sell the 12.5 put for 33 cents? It is marginal at best. So I still have to I've got to look at my decay profile again for SVXY. I think it's like 2 or 3 cents a day. So maybe you're getting 10 cents a week out of it. So we'll see if that's enough really to buy a call. But like I said, futures are in the 16, 17 handle. So they've got a long way to go. And you're also getting very close. The sweet spot for that product will be if we can kind of stroll into April with a relatively high future price. SVXY will be all the April future, which there are times when the vol products will move a little faster than normal because the whole product is basically one future. And if they decide, if that's kind of when you're on the cusp of where vol is, and if they start to hit that future, remember the whole product just owns that one contract. They haven't started buying the next contract yet, or shorting the contract as in this case. So that could give you a little bit of gas into the cycle. But right now they're kind of 50-50-ish.
See, you complain about not having your own segment, and courtesy of our listeners, I have given you a mini segment of your own. So hopefully you feel better as we keep on rolling into our final segment. Yes, I know it's sad. I'm sad too. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right. Excellent producing yet again from the studio. So we're on into our final segment, Around the Block, the portion of the show where we break down the weird, the wild. Actually, that's our old segment. I'm just kidding. course, this is, of course, a segment where we tell you what we're looking at for the rest of the old week. Uncle Mike's got tariffs on the brain, so maybe we'll start there. Uncle Mike, in addition to tariffs, which you're right, it is a fun word to say, what else you got on the mind, sir?
Well, I mean, we finally got the news out. The president finally spoke. We kind of know what happens, or we're going to know what's going to happen with the market. So tomorrow's a key day. Watching the numbers, as I say, pretty much every time in this segment. Wanting to see where that goes, and also watching energy. It's kind of been a little bit stagnant lately, and or to say the least. And wanting to see if we can get a little bit of movement from the energy sector as well. So that is what I am looking at.
And Mr. Rock Lobster, in addition to looking at the futures melt, what are you watching for the rest of the week, sir?
I would like a side of French fries with that futures melt.
Yeah, I'm hungry now if you're talking about future melts.
I know. We'll see how that non-farm payroll number looks. The ADP number was okay. And if everybody just gets back to what we'll just call the normal crazy that's existing in the White House. I'm still trying to think of, I'm the president. Whoever this Peter Navarro guy is, the trade guy, and you get rid of Gary Cohn, and you get rid of that guy, and you keep that guy. I don't know if I like that. I'm not sure if I like that trade, but he's the president and he's a billionaire. So what am I going to say to him?
Maybe something about tariffs. That seems to be what he's all up in arms about these days. Either way, listeners, that's going to do it for this fun episode all over the hinterlands and beyond this episode of the option block, I should say, down here on the south portion of the East Coast here in Florida, all the way up the coast to where they're up 20 inches of snow in the hinterlands of Maine, and back to the hinterlands of Chicago, aka St. Charles, and of course back all routed through the glory of the Options Insider studio. They're all just to come to you guys. That's how much we love you guys. So hopefully you got a lot of fun out of it. We love bringing it to you. Before we go, let me go back around the horn one last time and see what everyone's up to that may interest you. Let's start with you, Uncle Mike. Let's say I'm intrigued by this rolling of puts notion and I want to learn more. Where should I go? What should I do?
By all means, give me a call at 312-212-3531 or shoot me an email at mtosaw@rcmfs.com. Would love to hear from you.
There you go. I think right now, Mr. Listener, is actually two of us in the car. So this is the rare option block with two members in cars, which is kind of rare. The Rock Lobster's not, though, because he is buried under snow. He can't drive anywhere. Mr. Rock Lobster, sir, what's cooking in the land of the pit? Let's say I like all this futures melt stuff. Maybe I want to subscribe to a newsletter. Where should I go? What should I do?
Oh, go to our website. Go to the Vault newsletter. Sign up. I moderate the newsletter. I send out ideas. We have a once-a-week live class for 30 minutes to talk about the ideas. Entry, exit, everything, and all the vagaries of volatility products. I'm only focusing on the major indexes and VIX, VXX, UVXY, SVXY, and those products. So how they all work together. Hey, put some learning on. You'll love it.
There you go. You'll love it. Check it out, optionpit.com. You'll see that Vol newsletter tab there. Click on that, and then click subscribe. And then if you didn't get enough of futures melting, you want to hear more about that and all sorts of other fun stuff. Why do SVXY call spreads blow chunks now? All the other fun stuff. Check out the newsletter there to learn more. And on behalf of the Rock Lobster and Uncle Mike, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, and all the other fun stuff. Let us know what you like about the show, what you don't like. We want to hear. Also, make sure you get your nominations in for the options broker battle because, hey, it's fun stuff. And we'll see you next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.